Next, let's get the latest business news, and we'll start with what is a hell of a story, and we're going to bring in Charles Pellegrin. This is the ongoing saga at ChatGPT, the owner company, OpenAI. Sam Altman, a man of the moment, sacked. They've gone to Microsoft, maybe come back. The staff want him to. What's going on?
Exactly. There's so many different layers to the story. The latest is we'll get back. Quite a few people have expressed dissatisfaction with OpenAI's board that decided to sack Sam Altman, especially the hundreds of employees at the company who are openly saying they'll resign if Sam Altman does not return. And there's also, on top of that, joining the chorus of some of this dissatisfaction are OpenAI's investors such as Thrive Capital, Coastal Ventures, and Tiger Global Management. And according to reports, the company's biggest investor, Microsoft, would be amenable to such a return. The report does mention conditions for this, though. The board structure of OpenAI would have to change so that this kind of scenario doesn't play out again, and the current board would have to resign. And this is where that plan could hit a snag, considering the deep differences that have emerged over the running of the company, as we saw over the weekend. For Arijit Sengupta, an expert on AI, this whole saga has led to some important lessons being learned.
Good things that's going to happen out of this is organizations will realize they have to look at multiple models. They can't just put all their eggs in one basket. This idea that one model will rule them all is a completely wrong idea. Because for different use cases, for different situations, different models will be better. Innovation is happening very quickly.
In the meantime, Sam Altman has been poached by tech giant Microsoft, as we said, which was also OpenAI's main backer. He's been joined by other key staff from the startup to help build a new AI research team at the software giant. Well, Nick Rushworth takes a closer look at Sam Altman's career.
Following his surprise ouster by OpenAI, Sam Altman moves on to OpenAI investor Microsoft, where he will lead an advanced artificial intelligence team that will have the computing power necessary to develop AI products. In a reply on X, formerly Twitter, to the chairman and CEO of Microsoft, the AI pioneer said the mission continues. Altman in 2015 joined up with Elon Musk and others in starting OpenAI, a research company with the stated goal of building generative artificial intelligence that benefits humanity. That led to ChatGPT, now used worldwide. It is technology that he knows has its dark side.
I think if this technology goes wrong, it can go quite wrong, and we want to be vocal about that. We want to work with the government to prevent that from happening, but we try to be very clear-eyed about what the downside case is and the work that we have to do to mitigate that.
I was very excited about AI as a little kid, like a big sci-fi nerd.
Altman got his first computer aged 8. He went to Stanford to study computer science but dropped out after a year. He co-founded Looped, a location-based social networking app, when he was 19.
AI is going to impact somehow.
That company was sold in 2012 for $43 million. It has been his work with OpenAI and ChatGPT that has brought him to worldwide attention as a tech titan. Altman is now being compared to his hero, Steve Jobs, co-founder of Apple, who left that company in 1985 only to return 12 years later.
Let's take a look at the stock markets. Now in Europe, we're seeing trading at the open of this 2 days showing a bit of a mixed picture across the different boards as third quarter earnings reports are starting to slow down. Investors will be keeping an eye later in the day at the release of minutes from the last Federal Reserve meeting. You can see the FTSE in London opening the session down 0.1% lower, the DAX in Frankfurt up 0.1% higher, and the Paris CAC up almost 0.2% higher. Most stocks in Asia trading either higher or flat. As we can see, the Kospi in Seoul up 0.75%, the Shanghai Composite flat as well. The property and tech leading the gains there. Microsoft's gains on the stock market in the US, pushing up shares for Asian chip stocks, and Beijing's release of a list of 50 beleaguered developers that would be eligible for new financing has helped along this, the real estate sector there as well. Staying on Chinese real estate, though, and this is where we'll end this bulletin, the underlying data does not look great for the sector, which represents about 22% of the country's GDP, according to UBS. Analysts believe more support is necessary for the industry, both on the supply side with help to developers and on the demand side with help for prospective homeowners. Home prices in October fell by the biggest margin since 2014 across 70 major Chinese cities, down 0.6%. It was down 0.5% in September. And the total amount of outstanding property loans has fallen for the first time in history in the country, Gavin.
Yeah, a massive effect, hasn't it, on growth in China. Charles Belgrand, thank you, on our business desk.